Hello, everybody. Welcome to this very first webinar here at KeytoProp. I'm Matteo Marchetti, financial market analyst and educator here at KeytoProp. Today, we start with this new, very new format, which we call the Prop in Action. And in this format, we will try to pass one of our challenges, so basically, what we did is we bought one of our challenges, and now in this webinar series that we call Prop in Action, we will try to trade live on the American market, but not only, and we will try to pass the challenge. So first of all, just in order to wait for other people to join first, and because I know that most of the time most people join with a couple of minutes later. So first of all, I'm gonna explain you this new format, what we normally do during this kind of webinar. And then we will start going deep into details about what we are doing, about the market, about what's going on the market. So essentially, normally we give you a bit of macroeconomical background, which is of course really important in order to trade on a daily basis. You have to of course to understand the most important macroeconomic data and events in order to be ready on the market. And then we give also a technical point of view on a multi-day perspective, so trying to analyze the daily charts. And then we reduce the time frame, trying to understand what can be the best opportunities or of the day, let's say. And we do this on 15-minute charts, but our let's say trading time frame is going to be the 2-minute charts. We will trade most of the time on the S&P 500 because, like, for me, is one of the best market to trade. You have a lot of different information coming from also, for example, the option market, which influence a lot the future market. So this is really important. I mean, to me, is one of the best trading instrument to trade, to be honest with you. So first of all, before to start, let's give me some feedback, please, using the chat. Let me know if you can hear me loud and clear, and especially if you can see my webcam, so I know everything is fine and we can start. So please guys, use the chat and confirm everything is fine. So I'm gonna start to share my screen, and we're gonna start breaking down everything we need to know to trade today. So just give me a second to share my screen. Here we go. So this is my screen, and as I told you, so first of all, before start talking about this kind of setup, this kind of platform and whatever, what I would like to give you, I would like to give you a bit, as I told you, a bit of macroeconomic background. So let's see what are the most important macroeconomic data today. So essentially, here you can see the most important macroeconomic data just released today. We had the labor market data in the US with initial jobless claims and continuing jobless claims. From this snapshot, everything looks still clear, in the sense that, of course, as you can see, initial jobless claims are below expectation. And also continuing jobless claims are below expectation. But we need to go a bit more into details regarding the US labor market, because essentially what we are seeing is that initial jobless claims are at the lower value since, if I'm not wrong, since last 3 months. So since 3 months ago. But at the same time, the continuing jobless claims are rising, and they reach essentially the same level that they had in 2021, when we were in a period in which we were coming back from the pandemic, so the emergency that the pandemic brought. So still, labor market in the US is kind of still solid, definitely, but at the same time is not as tight as it was before. And as a confirmation of this kind of data, we had also like during last week. A speech, a very important speech by Waller. Sorry, just give me a second to, and I will try to show you, because essentially Waller has been the very first FONC member that essentially express his idea to cut interest rate in the next. In the next FONC meeting, and this is what he said about the labor market. For example, he said that he thinks that the labor market is just fine, but only on the surface, because the BLS data revision and non-BLS data survey as the ADP has shown essentially no growth in the last 3 months, as he said here. So essentially, this is one of the reasons why he thinks it's necessary to cut interest rate by 25 basis points in the next FONC meeting, which is next week. So this is like regarding. So we closed this labor market. We closed with this labor market data, and then we had also PMI data coming from this data coming from S&P Global, which is like, of course, is one of the biggest institutions to release this kind of data. So of course, these are market mover, but I really do prefer the PMI which are released by the ISM, because the ISM essentially goes really much more into details and create this kind of separation that allow you to better understand the both like the service market and the manufacturing, so the industrial market. But definitely we have to look at this number, and of course, according to S&P Global, the manufacturing PMI, which came out at 49.5, is below the expansion threshold, which is 50, as we know, while the services PMI came out well above expectation at 55.2. So the service sector is still in expansion, let's say. So this is just to give you a bit of economic background. Yesterday night, the S&P 500 reached another historical height and a new fresh all-time height after the release of an article by the Financial Times saying that essentially US and Europe reach a deal about duties. The final percentage should be 15% instead of 30%, which was the previous tariffs that President Trump would like to impose to Europe. So of course, every investor was already aligned to 30%. Now that we realize that probably will be 15%, of course, the market rose a lot and reached a new all-time high, which actually topped also today, stopping right now the yesterday reached all-time high. So now let's jump into the analysis, so into the core of this webinar. And let's start talking about the daily chart of the S&P 500. So as you can see here, I don't know how many of you are familiar with volumetric analysis. So I don't know how many of you are familiar with like concept as volume profile, delta profile, footprint charts, order flow, this kind of concept. Please let me know in the chat if you already know this kind of concept or if you already use this kind of analysis in your daily trading activity. Because this is going to help me in the webinar, because of course if I understand the vast majority of you already know this kind of analysis, then I will proceed in one way. If the vast majority of you has no idea, has never seen this kind of analysis, I have to proceed in another way. So please don't be shy and use the chat and let me know if you're ready. Hi, Alessandro. Hi, everyone. And yeah, of course, please let me know. Okay, so essentially this is the daily chart of the S&P 500, and what we can see here is that we just broke a phase of compressed volatility, which is this one. We can also highlight it here with a figure. So this is essentially a very sideways trend. We broke the resistance, and then we reach another new historical high. So this is the situation. From a volumetric point of view, we can see a double distribution here. The POC is down there around 5,968, and we have also another distribution on here on the top. In the middle, we have an imbalanced zone. We have a low volume area. And to me, the most important bar is this one. Why this is the most important bar to me? Because this is the bar that essentially has the highest volume within the last, let's say, I don't know, 20 to 30 bars. Okay, so 20 to 30 days. This is the bar which has the highest volume. So when you can identify this kind of bar, you have to understand that if the bar is rising, normally you have the support zone. You have the resistance zone, which is the upper shadow. Just give me a second to draw it. Okay, this is the upper shadow, and then we have also the lower shadow, which is the support. Okay, so now we have a very important level, which is the 6,240. That is the most important support, in my opinion, for the medium term or for a multi-day perspective. So if you want to trade like on a weekly basis, or if you want just to open a trade that has to stay open for a couple of days or a couple of weeks, I think this is a very important level or area. If prices break this area, then should be what could happen essentially is that the prices can rebalance this area of low volume activity. So I expect, in case prices break below this level, I expect a sideways trend in this area. So between this low and this high, which is 6,100 and 6,100, 6,050. It's like already an area that I would consider in order to re-enter for a long position for the long term. This area also is, would be a 5% retracement from the top, and these percentage levels of 5%, 10%, 50% are really market sensitive, at least from my experience. Okay, so this is the situation in the daily chart, and then let's get into details and let's try to understand what's going on the market right now. So. I'm just checking also your answer. Just give me a second after. Let's start to do the analysis, because the market is moving, and then I will reply to all your questions, guys. So essentially, this is the my trading map for today on the S&P 500. And as you can see here, let's start. Showing you what is my setup. So as you saw, I always start from the daily chart, trying to understand what the market is doing in let's say a medium term perspective, because of course the context is really important. I will try to figure it out what are the most important news of the day or data of the day. And regarding the intraday trading setup, this is my setup. So I try to analyze the most important price area in the 15-minute charts, and I will trade, as you can see here, on the 2-minute chart. Okay, this platform is a platform which is not one of our platform. This is a platform of volumetric trading, which is a very important company that provide this kind of platform, which is really I mean, it's an high-end platform. It's a platform that allow you to do a really good analysis, especially if you want to trade intraday with the order flow dynamics and stuff like that. So let's go into details. Well, the initial setup is pretty much easy in the sense that I have here on the right hand side, you can see here my weekly volume profile. In like here you have the weekly delta profile. Of course, in the weekly volume profile you have highlighted in purple the POC. You have highlighted in red the high volume nodes and in green the low volume nodes. The yellow one is the VWAP is the weekly VWAP that you can see also here as a dash yellow thin line on the charts. Okay, so this is regarding the volume, the weekly volume profile. Then what we have the composite profile here. So this is the profile, a long-term volume profile, and then we have the composite delta profile. As you can see, is a very long-term profile. Okay, because the POC is down there. So very long-term profile, and now let's jump into today's session. So as you can see here, we have a really balanced session until now, which is like which has a lot of negative delta at the bottom and a lot of positive delta at the top. And this means that, of course, retailers are essentially doing what they do all the time. So they sell at the bottom and they buy at the top. So the opposite of what they should do. So in most of these cases, the most profitable strategies is just to try to buy at the bottom and sell at the top between this area until prices, of course, break one of these level. Then what we have on this other part of the chart, we have, of course, the volume profile, the session volume profile, and the delta volume profile. So this is the volume profile, this is the delta volume profile per each session. And then we have highlighted here with a solid yellow rectangle the most important uncovered or naked low volume node of previous session. So as you can see here, this we can already delete it. We have to move it because it's covered now. Now I'm going to explain you this thing which is really important to me. In the if you're doing volumetric analysis in general. But essentially, what you have to do when you analyze this kind of volume profile is that you need to consider only the things that you can see as an observer from the right-hand side to the left-hand side. So imagine to be here looking at the charts from the right-hand side of the charts to the left-hand side. For example, this today's trading session is covering completely the previous part until the low. Until today's low. Okay, so everything that happened yesterday above here, which is covered, if you observe the chart from here to the left, is covered. You don't have to consider it. Okay, because if you consider it, the prices already retested those zones, so are not that valuable anymore. So I highlighted here. Highlighted the low volume node here, another one here, and then we have the lower one. But now let's jump into today's analysis. So today's analysis, we have the range high, as you can see here, and the range low. So the range low should be around 6,370, and the range high should be around 6,418. And these two ranges essentially are taken from the option chain of the option that nowadays are famous as 0DTE, which is essentially which are options that expire the same day. So in the past, essentially, we used to have monthly option, weekly options, but nowadays we have even daily options. So every day there are some options that expire. and this brought a lot of influence in the S&P 500, the future market, because essentially before the zero DT option, what happened in the market was that essentially the only way, for example, to go longer on the S&P 500 was essentially to buy the future. Okay, but with this kind of option, you can also create a synthetic position, which is equivalent to be long on the future. Okay, so as you can understand, the creation, especially the creation of this kind of strategy, complex strategies in the market, influence the S&P 500 a lot. So we need to take. I mean, we need to consider this thing when we are doing our analysis. Okay, so. If you want, I can show you how I calculate these ranges every morning. But first of all, let's try to understand what they are. So essentially, this is a range. So these are two ranges, one high and one low. So we have one range between 6,418 and 6,370. So this. The concept. What is the concept? So essentially, the S&P 500 should close. So should have a settlement tonight at the expiration within these two levels, with a probability of 70%. So the market this morning was giving a probability to the S&P 500 to settle, so to close within these two levels of 70%. Okay. Of course, these levels are dynamics. I calculate this level taking into consideration the straddle, the value of the straddling points around the previous settlement strike, most close strike, let's say, or closest strike. Sorry. So I take, for example, yesterday the settlement, if I'm not wrong, was 6,396.25, if I'm not wrong. So I take the closest strike, which is 6,325, 95, and I check how many points is the value of the straddle around this level. Okay, this strike level. Then, of course, I consider also the green line you can see here are the level that are taken as well from the option market, but from different reasoning. And of course, you can see here the resistance 1 and 2, and also 3, and you can see down there the support 1 and 2. Okay, so. My idea of trading today. Now we will try to find, of course, some potential trade to do, but my idea today is, of course, to wait for the prices to reach this area here, the one highlighted in let's say light blue, or either I'll wait for the prices to reach this area down there, which is also highlighted in light blue. Once the price will reach either one area or the other, I will try to trade contrarian, and of course the target, the final target will be the return on the VWAP. But in general terms, from my experience, what I can tell you is that once you enter in the trade in one of these area here, you can take as a first target, let's say 8 to 10 points. Okay, 8 to 10 points is a reasonable target for this kind of trades. And look, is a lot. Okay, like even if you do one trade per day, and if you do 10 points on the S&P 500, depending on the size, of course, but 10 points is 10 points. Okay, you can do a really good job. Now, well, the market is quite. I mean, the volatility is really low today. So, I mean, I did not expect any crazy moves, apart from, of course, the case in which President Trump will start to tweet something. Because if he starts to tweet something, of course, we will have crazy volatility on the market. But for the moment, the market is really quiet. So these are the level where we will try to trade. Unfortunately, we had a huge potential trade here before the webinar. I didn't open it just because I was waiting for the webinar to do some trade, but I'm gonna show you later, which is this trade, this potential trade here that I didn't open actually. But now, first of all, I'm gonna show you also this other thing here, which is key to understand the whole market structure and the whole market micro dynamics, which is passive liquidity. So essentially, we have two different information because from here, now I'm gonna show you in the 2-minute charts, which is okay, so like here we can have a better understanding of the what we call the takers in the market, so of aggressor on the market. So we have a better idea on what the aggressors are doing. So for example, here I see a lot of positive delta. This means that the aggressor, the buy aggressor, so the buy at market buyer, were stronger than market seller, and the opposite. Okay, so but here we can see, and we can go into details about what they are doing from an aggressive point of view. In this other platform here, which is the Volbook, which is called Volbook, we can have a better understanding about the passive side of the market. So about the makers, the market makers, or in general makers, so people, entities, institutions that provide liquidity to the market. So we have two actors in the market all the time. So we have the takers, which are the market buyer or seller, so the one who just want to buy or sell at the best available prices, and these are called takers because they remove, like executing their orders, they reduce the liquidity on the market. On the opposite side, we have the passive actors, which are buy limit and sell limit, that provide liquidity to the market, because with their orders they do not take any liquidity, but they provide liquidity, they add liquidity to the order book. Okay, so as we can see here, we have like the heat map. The heat map is pretty simple to understand. I mean, it represents the order book during the time, and is essentially like a chart. So as soon as you see here the line that comes from very dark to light dark, and from light dark to yellow, from yellow to orange, from orange to red, and so on, it means market is adding liquidity to this level. Like for example, here we had no liquidity at all until a certain point, and then the market started to charge liquidity around in area 6,396. Okay, market continued to stay with a high level of liquidity until here, and then dropped a bit. So they reduced a bit the liquidity, and the line became yellow from red. Okay, so red is the maximum liquidity, yellow is quite decent liquidity, orange is decent liquidity. Okay, this is more or less the ratio. Of course, a very important thing is just to take I mean, very important thing is to consider only the liquidity which is stacked. Okay, so we consider only the liquidity that is already on the book for a certain period of time, and we do not consider, even if it's huge, this kind of liquidity here, because this kind of liquidity here that moves like with prices and around prices is always, you see, normally on the S&P you will find this kind of liquidity which is provided by the market maker 1 hour, since like 1 hour before the opening bell. But these are just market makers, so they are providing liquidity, and their intent here is just to create some boundaries in case of extreme volatility. So their goal here is not to be executed. Okay, so that's why we do not consider them. We just consider the one who are like placed on the book and remain on the book for a certain period of time. Okay, and I can show you, for example, the activities of the market maker even here probably. You see, for example, this is could be. I'm not sure, of course, yet, but could be a liquidity provided by market makers. And now we have to see if they are moving. It's a market maker, and we do not have to consider. If it stays, we have to consider it. Okay, so this is the ratio. Then at the bottom, of course, we have very interesting indicator, which is the stop ice. So when it rises and we became green here, it means we have an iceberg order on the bid, and when it becomes red, we have an iceberg order on the ask. So another important information. And then we have this kind of pattern here, which is called stop run, which is a situation in which essentially a lot of market order goes into the market at the same time within like milliseconds, and they sweep the book essentially. Okay, and these are really interesting from let's say a practical point of view, and we will see it during this series of webinar. So before continuing, let me reply to the question. Well, if you're trading for like 1 year and a half, okay, so you're pretty much a beginner, but and you're doing really great if you're trading in using a demo platform, because of course, like putting real money into the market is the stupid thing, the most stupid thing you can do, like. Because you will lose money for sure. So the best thing, the best let's say thing I can say you is just start to understand the microdynamics of the market and the microdynamics of the market. So of course, I mean, I really I love volumetric analysis, because I think that is the only way you can understand what institutional are doing on the market. And if you are able to follow institutional flow, you are aligned with the market. You are always or most of the time trading following the most recent trend, and so you're gonna be fine. So but if you want, I mean, you can just text me on Telegram, and we can have a quick chat about everything that you need. Okay, so just let me know. In my Telegram channel you can find all my personal details. Okay, so now let's see. Also, another important thing that I always check during my analysis is this one. I'm going to show you. Just give me a second. Okay, here we go. So this is the volume on the 0 DT option that expired tonight. So as we can see here, this is on the S&P index. So of course there is a difference between the S&P index and the S&P future. Today this difference is between like is around 30 points, 33 to be like precise. So when we evaluate these kind of strikes, we have to add, of course, these 33 points of difference. So, for example, this level, which is 6,380, actually is 6,410. So this is a very important level, 6,410, and then we have 6,440, another important level. As a support, we have 6,380, and which is actually, you see that when things align in a certain way, they confirm your analysis. Like, for example, this level here is has a quite decent amount of put option. So if we imagine that institutional client have sold this option, when essentially the prices reach this level, they have to buy the S&P 500, which is the underlying, because otherwise this option that they sold, they're gonna go in the money, and they will lose money. Okay, so probably institutional will defend this strike and will defend this strike, but this strike in particular, which is the first one in terms of importance, is also so if we add 33 points to the 6,350, what is the result? Is 6,383. And as you can see here, where is our level? This is one of our level, okay, 6,383. Okay, so this is very important. Yeah, so the market is very is continuing here sideways, not going anywhere. But now we will try to look for some, let's say, potential trade. Just give me a second to better. Okay, so here we are. Well, actually, we can arrange our desk even slightly better. Just give me a second, because I want to do something like this, which is better. So I want to have the passive side of the market on one side, and also the volts on the other side, just to see. So as you can see here, we have a lot of liquidity around here and here, which is the daily high. Normally above the daily high or around the daily high, and above the daily low or around the daily low, you will always find some liquidity. Okay. So of course, well, the first potential trade should be longer here. We can try to force a couple of trades just to see how it's going. Let's see what the market is doing. I think we can try. Okay, I just open a buy position, as you can see here. I just open a buy position. Now we're gonna try to understand where we can put our stop losses that will not be down here. Yeah, well, this is just 3 points, so it can also be. And just give me a second. We'll try to figure it out, the target. So essentially, now I'm going to show you. See how many the prices is pushing a lot, with a lot of big green bubbles that represent buy market orders. Okay, so let's see also from here how it is. You see, from now, what I'd like to do when I trade in challenges is already placing my stop loss at break even. Okay, so it doesn't matter what the market is doing, or what we'll do in the near future, because even if it comes back, I exit in not with a loss. Okay, at break even, which is really important. So it's pushing. Of course, my target. What is my target? My target is this other liquidity here. So 6,410, which is actually 3 points above the level here. So I need to go 3 points, which is 74. Okay, yeah, on the top, yeah, essentially on the top, yeah, the daily high. No calculation needed. Sorry. So yeah, let's see. Maybe we can also close the trade. I mean, it's just the first trade. This is just a very small trade, because now it can also retrace down there and then go up. Well, let's see. We have the stop loss at break even, so we are not risking anything. The trade is already in, and everything is fine. So let's see if the market would like to also to break this level and hit a new all-time high. Let's see. It's trying to absorb here, so this is not a good sign. When you see a price rising and topping with positive delta, is not a good sign normally. Okay, because it means that market buyers try to force the market pushing higher, but at the same time, it means that the limit seller were stronger and executed or filled every buy order, but without allowing the price to move further. So now they are defending this zone here. You see the 406. They are defending this zone. Maybe let's see. Okay, we got stopped out, but this is a nice area, I think. So we'll try to reopen the trade. Let's see, a bit higher, which is never a good thing, but yeah, we will try. let's see what happens. The absorption to me is kind of nice, so we can do this kind of trade here. And yeah, I hope first of all everything is clear. Let me know if you have any question or whatever. Let me know while we will try to figure it out this trade here. So let's see. Let's see. Let's see if prices would like to go up here to test this area here. Let's see. Otherwise, I mean, well, in general terms, I'm gonna give you also a quick overview of the challenge. So the challenge is essentially, as you can see here, is 100,000 USD challenge as an initial balance. We already did couple of dollars of profit, so almost $300 profit. Of course, the way is long, you know, to reach the goal is going to be very, very tough, but we will do our best and we will try to stay within the rules of the challenge. That of course you can double check every challenge we offer in our website. KeytoProp.com, and yeah, so this is it. Essentially this format, we made this format for this reason. So our goal was to try to explain how you can trade one of our challenge in real time. I think this is really, really important. I think as well that I also think that not a lot of prop firm are doing this kind of education webinars, let's give also some honest feedback, because it's really important for us to have feedbacks, because it is the only way we can improve the services we are providing to all our clients. Okay. So yeah, the prices is, but I think they would like to test this area here. Let's see. I wanna reduce this one because I need to be able to close it really, really rapidly. If it spikes, let's see if it spikes. They're pushing lower. You see, from what we can see here, why I'm still, let's say, kind of optimistic for this trade, just because we had, as you can see here, we had a lot of selling order, after this buy order here, but prices rose, or actually, well, didn't move. Okay, so it means that essentially the limit buyer are trying to maintain the market above certain levels. Okay, they are defending certain levels, and this is very, very, I would say, important. So this is probably the key. Prices should if they broke this area here, they're going to execute all this liquidity and probably reach a new high. Let's see. But I repeat, I mean, these are very, very small trades. I mean, you made like a couple of dollars, a couple of, I don't know, even 10 to 50, 20, $30, $40. But the most important trades are the one in the range high and range low zone that I showed you before. Okay, so these are the most important one, let's say. Okay, so the position is still there, so price is not really moving. We are also at the top of the distribution, as we said before. So we are risking a bit because we bought at the top of the distribution, which is something which is not really clever, but normally in general terms. But if we have the correct setup, the correct liquidity to target, we can also try to take this risk, let's say. So another things that make me a bit optimistic about this trade is the fact that prices are making higher heights and higher lows, and essentially in the lows, so in the lower shadows, they are absorbing. So we have absorption. meaning that the seller are trying to push the market lower, but as I said, limit buyer are for the moment strong. Okay, so a very important thing when we are doing this kind of webinar, this format work also this way. Like I mean, every we are trading this challenge on a daily basis, let's say, but of course it's very difficult to concentrate like every trade during the webinar, which is only 1 hour per week. Okay, so normally what I do and what we do is like we post every trade in my Telegram channel, which I mean you can find me as Matteo Marchetti Trading on Telegram. If you want, like you can join, and even if you don't speak Italian, there is a very cool feature in Telegram. You can go to settings and language, and you can activate the translation, and Telegram itself translate my messages in every language, more or less. Okay, so this. Let's see if I'm able to. Okay, let's see. Now we move the stop loss to break even again, because and let's see. Now we have to see if they will try to break this area here. Now they absorbed a lot, and this is not a good thing. So let's see. They mark another high. Let's see. Hopefully, our stop loss is not gonna be triggered. And but yeah, this is the this is the attitude I have every time I trade on challenges, because essentially we as KeytoProp, we are looking for traders which are able to manage risk. So the first thing you have to do in trading is like manage your risk, manage your losses, cut your losses, and try not to lose. Because if you don't lose, yeah, okay, you could even not gain, but your challenge will be still fine. Okay, there's always another opportunities. There are always market are there today, tomorrow, in 1 month. There will always be a market. So I mean, you can find opportunities everywhere, every day. So there's no point to risk move your stop loss as you can as soon as possible. Move your stop loss at break even, and then leave your trade go. So yeah, we are almost at the end of the webinar. I would like to see the last, let's say, rise to break this area here, and then we will set, of course, the order for like waiting the market in the range high and range low area. Okay, so for the rest of the day. But I mean, every time I close a trade, I'm gonna send you the trade report in my Telegram channel. Okay, so every day we have the webinar, or in general terms, even if we do not have the webinar, but every day I'm trading on the prop, I'm sending trades to confirm you what I'm doing, and of course I'm doing the same for the trading part, which is like not related to prop. Okay. So they are putting. Let's see something. Let me see something. So let me see if they put liquidity also above. Yeah, they're adding liquidity here. I think they would like to reach this level here. So the 6,420. I'm pretty much sure they would like to reach it. Let's see if they break this level. Let's see. We are there. We are there, and we have just here we go. Here we go. Okay, closed. Okay, you see, why we close it? Maybe it's gonna continue. It's gonna continue maybe until the range high area, as we can see. We're here, as we can see here. Just give me a second. Okay, so as we can see here, maybe it can continue up to the area. But why I close the position? Well, first of all, because we are in a low volume zone area. Second, because I seen this thing here. You see, now probably we should even open a short trade. But anyway, what I saw here, essentially, I saw the first buy, huge buy, but followed by a lot of sell volume. You see, now I'm pretty sure they would like to execute all this liquidity here, but never say never. We did a great trade, so that's fine. I mean, we need to do step by step. Do not force anything, especially considering, as I told you, that our most important trade on the S&P every day are around this area. Either the upper one or the lower one. You see what happened? Huge stop run. Well, this is really good. You see, liquidity is always attracting the market. You see, a lot of liquidity still, up to 600. Sorry, up to 450. So let's see. Huge volume here, huge volume. They are also absorbing. Let's see. But yeah, this is more or less the trade. Now, what we are going to do right now, and then we will close the webinar. We will place some orders on both the high area and the low area to be executed. So essentially, I want to place a sell order 9 points above what we are. So 9 points is 84. Okay. So I will place an order at 83.99, which is perfect. And I will place, so a sell limit, and I will place also. I don't think it's going to be the case today, but never say never. So, which is like, I need to do the calculation. So the difference between our spot and the, okay, so is 10 and 17.27. Okay, so okay. Let me check something which is like really much quicker. I mean, it's much quicker. Okay, I'm gonna place the order, and then I'm gonna explain you all the orders. Just give me a second, and then so I mean we can also like close the webinar. Okay, so is around. Just give me a second. So this is here, which is okay. Okay, here we go. Here we go. Okay, we'll place a buy order right here. Okay, so essentially what we did, we just place a couple of orders. I did not place any stop loss or take profit. The take profit is going to be 10 points, and then the VWAP. Regarding the stop loss is still 10 points. Okay, I'm gonna add them later. So like just to not waste time right now. Okay. Anyway, this is the trade we did today. We did like 2 trades actually, which is like I mean, it's not that much, but it's not. Sometimes we didn't even place any trade because the market didn't give us any opportunity. So essentially, we made a bit of profit and we increase our balance. And step by step, we will try to figure it out how to pass this challenge. So how to reach the 50% profit we need to pass the challenge, okay, and get funded. So this is I mean, I would say that this is pretty much all for today's webinar. So now just give me a second here. Here we go. So I hope everyone enjoyed this webinar. We made a bit of analysis, which is also very useful. I hope for later on during the day, because of course we are waiting for our orders to get filled, and if we get filled, we can have probably other profits. Okay, the market seems like to. Seems like he would like to top here, but I think I mean the trend is really is a really important uptrend. So they broke the low volume node, so they are creating a volume above. They are like accepting the area, so I'm pretty sure that we are gonna reach this level here. Okay. So I would say this is it for the webinar. I hope everyone enjoy, and well, of course, our next webinar is going to be next week. So hope to see you soon next week. Have a good day and bye bye.